In today's video, I'm going to show you exactly how I passed a 100k ForTraders account in just 2 trades. Now, not only did I take this trade, but many members in my community also managed to take advantage of the same position using the analysis that was sent into the group, and you can join by clicking the link in the description below. My name's Antonio, I'm a full-time Forex trader from the UK, and I'm bringing you along this journey with me to show you what it's like to make a living from the markets. And before we jump into the video, make sure to hit that subscribe button so you don't miss any more content. I hope you enjoy the video. Let's get straight into it. Right guys, so first of all, here we are on the ForTraders website, and this is the prop firm I use, this is the prop firm I'm partnered with, and this is the only prop firm I actually use, basically just because of trust and because of reliability. I know they're going to pay out, the challenges are fair, and I really like the structure that they have, and I'm going to walk you through the different structures that they do have on their website, which is really helpful. So they have different types of challenges: 1-step, 2-step, 2-step light, which you can go in and actually look at the difference is between them all. I'll do another video maybe later on down the line between the differences, but in this instance we're going to show you there's the 2-step challenge. You can get 5k all the way up to 100k. I think they allow up to 300k worth of maximum allocation. Really good. They use MT5, which I know right now in the prop space, not many firms are using MetaTrader. Only for clients who are outside of the US can use MT5. I know that they do accept US clients, but US clients can only use DXTrade. And I think they are also looking to bring in other challenges as well. Other platforms, such as CTrader potentially. They are constantly adapting, constantly innovating to try and make things better for their traders. So for example, let's use a 2-step challenge on a 100k account on MT5. Their payouts are bi-weekly, and this is the most important thing, the interesting part. So they actually have customizable challenges, which means that you can have different maximum drawdowns, different refunds, profit targets, and they allow you to basically change different things depending on how you trade, right? So for example, the maximum drawdown that they have is 9%, but you can increase that for $79 to 10% if you really wanted to. Obviously it increases the price. However, it's really worth it, because think about it, for just $80 to get that extra bit of drawdown, what is $80 in the grand scheme of things? If you get to the funded stage and you get a 100k account, the payouts that you get from that 100k account definitely make the extra $80 worth it. So you can do that. You can add that if you wanted to, or you can keep the 9%, that's absolutely fine. The refund, which is really interesting. So obviously with most prop firms, you just get the refund that you pay for the challenge. After you passed, you get the 100% refund back. With this, if you wanted to get 125% of the refund back, which is great, it's only $26 extra. So it's, great thing to add if you just wanted to increase the price by a little bit, and you get extra. Basically, as soon as you pass, you get that money back. Profit target. So 8% profit target, which is great. It's not 10%, it's 8%, which is reasonable amount. You can, if you wanted to make it harder for yourself now, so if you think 8% is quite easy, you wanted to make it to 10%, you can actually decrease the price of the challenge by $52. Now, in my opinion, I think it's not worth making it harder for yourself for cheaper. I would probably, in my opinion, what I would do is I would make it more expensive to make it easier, because that way I have a higher probability, a higher chance of passing the challenge, and then just for that extra cost, I will make that back really easily once I get the funded account. So I wouldn't make it harder for myself. I would only make it easier, but obviously it's up to you. You can do whatever you want. Daily drawdown as well. So the maximum loss that you can take in a day is set standard at 4%, which is completely normal. If the profit target is 8, you got a daily drawdown of 4%, absolutely fine. But what's really interesting here, if you wanted to make it easier for yourself, you can increase that to 5%. Obviously it costs $58 more, but once again, making it easier for you to pass. When you get that payout on the live account, you will make that back with ease, especially on a 100k account. Or you can make it harder for yourself and you can knock price off the challenge. Profit split, again, really interesting stuff. So for me, I obviously, when I get the funded account, when I have my live account, I want to be keeping as much profit as I can. So for me, I would make the challenge harder. I would make it the profit split higher to 90%. For only $80, I'm going to be keeping a much larger share of the profit that I make on the account. For example, if you make 10% in a month on a 100k account, that's $10,000. With an 80% profit split, that's $8,000 that you're keeping for yourself. With a 90% profit split, that is $9,000 that you're keeping for yourself. So an extra $1,000 that you keep for yourself on the live account for only $80 extra. For me, it's a no-brainer. It's what I would do. Obviously, it's completely up to you. Like I said, this is completely customizable, which is great. So I would actually do the 90% one, but let's just keep it the standard for now to show you the standard pricing at 80%. So they always have discount codes available. I know right now it's like an Easter one. There's like an April code that you can use, which is great. So you can get a discount code. Another one as well, now I'm partnered with them, and this is the firm that I'm using. I have my own code, which you guys can use, which is ANT10. So you can come into the affiliate section and use ANT10. It will knock a discount off the price, as you can see. Great discount right there. So for any of you guys that are using this prop firm, obviously I would recommend them massively. If you do use them, find a discount code, also use my affiliate code. You get a massive, massive discount off the price, which is great. It's a reasonable price as well. A lot of prop firms right now, in my opinion, are racing to the bottom. What I mean by that is they are making their challenges really easy to pass. They're offering the cheapest prices, competing with themselves to make it as cheap as possible. In my opinion, I think that's just a race to the bottom. Whereas these guys, they understand the value that they provide. They understand that they are a reliable prop firm, so they can charge what they charge, and they're also giving a discount as well, which is great. And yeah, guys, the prop firm that I'm trading with, 4Traders, are really, really good right now. Just received my certificate, going to go onto my live account, start making some money with them. And if you guys want to as well, make sure you use ANT10. And yeah, good luck to anyone that uses 4Traders. But now, guys, we'll go into the analysis on how I actually passed this 4Traders account. Right, so here we are on EURJPY on the 1 hour time frame. I'm going to break down my analysis, the reasoning behind the trade, the entry, the exit, the stop losses, the take profits, everything, why I took the trade, and we'll go straight into it. So basically, guys, when I first jumped on this chart, I'm identifying where is price heading, what is price doing, understanding the targets, where I'm looking for price to go to. And the first thing I do when I look at the chart is to see the highs and the lows, the directions, the impulses and stuff like that. So first thing I notice when I look at this chart is we can see how price has had a strong impulse move to the upside, okay? This impulse move here is telling me that price is bullish. And even on the higher time frames, we can go and have a look at, if you look at EURJPY, you will see that EURJPY is just massively bullish right now. So that impulse move right there is just the confirmation I need to be able to tell that price is still bullish and that I should be looking for buy positions. Then what happens is, what tends to happen after a impulsive move, we tend to get a correction. Now this correction is just price building up liquidity to the downside for then a continuation to the upside. So I'm allowing price to develop, I'm allowing it to pull back, I'm allowing it to take the lows, and I'm looking to see, well, where is price pulling back to and how far, what key levels can we look at and stuff like that. So we're at this point of the chart now, and the first thing I will look to draw on is the Fibonacci retracement tool. And I will use that from swing low, which is going to be from down here. Swing low, and I will drag that all the way up to my swing high point over there, pull that across, and we can see that we have pulled back to a key level in the market at the 78.6%, okay? Not only is this a key Fibonacci level, but we want to combine this with another piece of analysis to make sure that this level is the key level for price to pull back to before we continue moving bullish. And we can see over here that we have a previous level of resistance within the market, which has also now been used as a level of support, okay? So this level of support, which was previously used as resistance, is why this is a key level within the market. We're gonna also draw on some trend lines. Now, trend lines I don't use too much for, you know, like proper analysis. It's just to visually represent price action, to see if there's any chart patterns or anything that's being taken place on the market. So the first thing I'm going to do is connect the high points, which is going to be here, like that. And then I'm going to connect the low points like this. Now again, trend lines for me is just to understand chart patterns, just to understand the visual representation of what price is doing. I don't really use trend lines for example, I don't wait for a trend line to be broken to enter a position. I'm using key levels such as support and resistance, highs and lows for my entries and for my breaks of structure. But trend lines is just to visually represent, and the reason I've done it here is because we can clearly visually see that price is correcting within a falling wedge pattern. Okay, and a falling wedge pattern is a bullish reversal pattern, which tells us that the selling momentum is slowing down. Okay, the momentum is slowing down. And how else can we tell that this is a falling wedge and that the momentum is slowing down? Well, we can use this tool here, which is the price range tool, and we can measure the length of the bearish impulses to see and get evidence that they are slowing down in momentum. So the first one we use from swing high here, we drag it down to the bottom of this impulse move, and we can see that this is a move of 204. Okay, so that first move, 204 points to the downside. We then measure the next move, which we can say is from this high point here. We measure it to this low point down there. We can see that this one is 149.7. So already we're seeing that the momentum from sellers who are pushing price down is slowing down. There's less and less sellers in the market as price is pulling down in this correction. And then the last one, we use a tool and it's clearly to see this one is only going to be 76.9. So we can see every single time sellers have stepped in, there's been less and less of them, less momentum, less orders within the market. And it's almost like a ticking time bomb for buyers to soon step into the market, and we're going to see that reversal. So we have that, that's clear now. We can see that price is slowing down in momentum. We're clearly bullish. We've had this impulse move. We've pulled back now to the 78.6. Now we need to know, okay, well, where do we actually enter this market? And like I said, I don't use trend lines to enter the market. I just use that to visually understand what price is doing. What I'm looking for now is a clear break of structure on the lower time frames, because as you can see, price is still technically bearish. Let me just draw this on. We can see price is still technically moving to the downside. We need evidence that this isn't just going to continue moving lower and lower. We need a break of structure on the lower time frames now to tell us that buyers are indeed in this market and are going to drive price a lot higher. So the way I do that is I'm going to drop down to the 15-minute time frame. So I'm on the 15-minute time frame now, and we can see. So the first thing I need to tell you guys is on the time frames, for example, the 15 minutes, I'm only interested in what has been going on specifically in that short amount of time. I'm not going to go down to the 15-minute time frame and have my chart like this, like that. I'm not interested in this price action up here. I'm not interested in this over here. I'm definitely not interested in out there. I'm interested in what has recently happened. Okay, we've just rejected this level of support within the market. I'm just interested in what is going on right here. So when you're on that specific time frame, just focus on that part of the chart that you're looking at. So the first thing I notice is obviously we've had a huge move to the downside. Okay, huge move to the downside into this level of support, the 78.6 level. And we've moved into it quite heavy, but notice once we tapped it, price began to move sideways. Okay, we're beginning to correct. We're beginning to move sideways. And what does this mean? What does this actually mean? This is a pivotal point within the market where a decision is being made. There's buyers entering the market, there's sellers closing their position, and the levels of buyers and sellers is becoming more 50-50. If price is moving in one direction, it means that there's more buyers or sellers in the market. For example, if price is moving to the downside, it means there's more sellers than buyers in the market, hence why it goes down. But when it moves sideways and it's choppy, It means there's normally an equal amount of buyers and sellers within the market, and that is the kind of market conditions that we're trying to avoid. So what can I see is kind of happening? I can potentially see that this level of support here is trying to be used as a level of resistance. Look how many times we've tapped this level of resistance here. But what we're doing right now is we're bouncing between a key level of support and a level of resistance. So for me, I'm waiting now for one of these to be broken. Whether it's a downside, then I will look for a sell position. But obviously I'm hoping and the probability is in my favor for buyers to step in. But I'm just waiting for that confirmation on the lower timeframes now for this level to be broken. Now I'll drop down to the 5-minute time frame so we can see exactly what happened. So we're on the 5-minute time frame, and again, notice how I'm zooming in on the chart. I'm not going like this and looking at the chart like this. I want to know exactly what is happening right now on this 5-minute time frame. So another key tip, guys, when you have a level of resistance like this, which is being tapped multiple times within the market, okay, a level of resistance that is being tapped multiple times, to most people, you would think that that is a strong level of resistance and that you can sell at that level and that price is going to come down from it. But I view it completely different. If a level of resistance is constantly being tapped, picture it like a hammer on a wall. If you're constantly tapping that hammer against the wall, it's getting weaker and weaker, and eventually it's going to be broken through. That's the same way I view price action. If I see a level that is constantly being tapped, rather than it being seen as a strong level, I'm thinking to myself, why is it being tapped so many times? Is it going to break soon? And most of the time, it actually is. Most of the time, it is going to be broken. And that's exactly what happened. So we can see we have the strong move from the 78.6, and then we begin to see a break of market structure, okay? Price begins to break to the upside, forming a new high. And this right here is my confirmation that buyers have stepped into the market, and that is my confirmation right there that buyers are back in this market. I just want to get my actual position up. So the first one was here. So price has broken through this level now, made a new higher high. We've now pulled back, and then I'm looking for an entry when buyers step into the market. So my first entry was at 5.9. and my stops would have been below this low point here. My stops would have been below this low. So I'm looking to get into this market. Oh, and by the way, so in terms of take profit levels, I jump up to the 15-minute time frame. My initial profit target would have been this high point here. That's where I would have been targeting. So this position alone would have been a nice 1 to 6. But you'll see that I actually closed out early because I hit the profit target of the prop firm like halfway through the trade. But if it didn't, if it was just my personal account or I was on a live account, I would have just let this run to take profit, and probably even further if you saw what EURJPY done. But for this instance, because I was only needed to make 8%, I just took profits. So that was my position on the first one. As you can see, so in terms of my actual entry, like how I look to do it, there's no real entry criteria. I don't go for candlestick patterns. I'm purely just looking at price action live in the flesh and seeing the momentum. If I'm seeing that price is pushed up and we're pulling back, I want to see buyers step back into the market. So I need to see some kind of momentum shift. And if I play price through, you can see that price began to shift in momentum. So I'm catching that initial shift in momentum right there. So that's the reason I took the entry there. We've now broken structure. Again, we've formed a new higher high within the market. Now let's see what price has done next. So what does price do? Price pulls all the way back down to that level again, just to retest it. Now it's interesting, price does that. And until price has broken through, for example, this zone back here, come back down into the support, until we do something like that, I'm still bullish. Until this break to the downside happens, I have no reason to not be in a buy position. Hence why I have my stop loss at this level, because that is the level that I would need to see broken to not want to be in buy positions. So rather than being fearful that price is pulling back, which most people would be like, oh, I need to close my position. Oh, we're bearish right now. I'm not looking at that. I'm looking at a potential scaling. I'm looking at price pulling back, to potentially grab more orders to make this analysis more probable and more confidence that price is pulling back to this level again. And notice the slowdown in momentum as we're approaching this level. The candles are getting smaller and smaller. We're then seeing the exact same shift in momentum again. What am I doing? I am entering a secondary position, guys. I am scaling in. I want to be maximizing on my position as much as possible. I don't just want to be setting one position and then letting it run. For me, I want to be maximizing it as much as possible. So if I have another reason to enter the trade, another confluence, which this one is price pulling back to the same level of support, I'm looking to enter the position again. And I actually took a second position at 987, which would have been there, with my stops now below this low. Okay, so I'm now in two positions on this trade. As prices move to the upside, I've trailed my stop loss to break even on my initial trade, and I'm letting this one run. So I'm now basically risk free on one of my trades. And then price continues moving to the upside. Okay, when we have this move here, I have closed my position because I've reached the 8% profit target. Both trades combined have reached that 8% profit target, as you saw in the screenshot. So I've closed my trade early. There's no need for me to be in this trade anymore. But if I was still in the position, I'll tell you guys how I would have managed it and stuff like that. So I would still be in this trade. We're coming close to the take profit level right now up here. And then what actually happens if I jump up to the 15-minute time frame, price just begins to correct and form market structure. There's no reason for us not to be in buy positions anymore. If I just drag these across like that, and you can see all price is doing is just correcting to the downside, because that's what price does. Price isn't just going to move in one direction forever. It's going to form some pieces of market structure, and all that is doing is shaking people out of the market, getting people out, stopping them out, stuff like that before it continues. Then what happens? Again, what have we noticed? What did I tell you about levels of resistances? The more time it gets tapped, the more likely it is to break. So when people are using this level, I believe most people would be looking for a sell position once we approach this level, because they feel like this is going to happen again. They feel like that move is going to happen again. So there will be a lot of people entering sell positions here, hence why we've had a slowdown in momentum. But what I say to my community and what I say all the time is, if we're bullish on the higher time frames, and if we are, tapping a resistance level multiple times, the chances are it's actually going to break rather than just be rejected. And I believe that's what happens. Eventually, yeah, we get broken through, and now we retest it. And for me, if I was on the charts at the time, I probably would have taken another buy position there. And then the rest, guys, the rest is just history, because if I jump up to the 1 hour time frame, we look at what price has done. We're now back in this bullish market structure. And if I play this out, we can see that EURJPY is back to being just heavily bullish, coming to our next level up here. And to be honest, I believe news came out and drove price all the way back down. Yeah, news came out. But what is happening right now, guys, I believe we are back in bullish market structure, and we might see this level up here tapped at some point. Because if I measure out this move here, that we had this initial impulse, and we measure that from where this started, I believe we can go and see this level up here at least. So definitely at least this level here. So it'll be interesting to see next week what EURJPY does. But anyway, guys, really, really simple stuff. It just goes to show I caught a very, very small amount of the move, a very, very small amount of the whole move that I was anticipating. Managed to make the 8%, managed to pass the prop with ease. Just 2 trades, that's all you need sometimes. High risk to reward, high probability setups. Really, really clean market structure, as you can see. But yeah, guys, I hope that was helpful. That's how I passed the ForTraders account. Be sure to use code ANT10 to get a discount at ForTraders. Really, really reliable firm. And I hope to see many of you funded with them and taking your trading to the next level. But guys, I hope that was helpful, and we will now go into the outro. Thank you for watching this video, guys. If you enjoyed it, be sure to leave a like and a comment. Let me know your thoughts in the comment section below. And remember, if you're watching this video and you're not subscribed, be sure to hit that subscribe button so you don't miss any more content. Have a great rest of your week, guys, and I'll see you in the next video.